So the first thing we're going to look at here, the information that is very important before you start the exam. The first thing we need to look at how long the exam for, and we can see the exam is 1.5 hours, so 1 hour 30 minutes. That means we have to be really quick in the exam. So exam is only 1 hour 30 minutes. That means you don't have time to waste for this exam. And the next thing we're going to look at how many questions we have to answer. So we need to answer 8 questions. So 8 tasks doesn't mean only 8 questions. There will be breakdown. So for example, under the question number 1, there will be A, B, C. So that's how it will go for all the questions. We need to make sure we are not wasting the time so that we'll not be able to complete the exam. For that reason, I tell all my students, make sure you revise the reference material before the exam. Do not depend on the reference material on the exam day. Then the total number of marks, 80 marks, is not relevant. You need to score 70% anyway. So it doesn't matter how many marks here. Could be 100, could be 80, could be 150. We need to score 70%. The rest of the question is very general for every single exam. So you cannot use this, not that, not that. If you like to use comma, you can use it. You really don't have to if you don't want. Then it says like for the 1,000, you can make either this way or that way. Both will be accepted. So this is the very common rules that we're going to look at for every single exam. So most important thing here is look at how long is the exam for, how many questions, so that you can make your plan within how many minutes you can finish one question. All right, let's start with our assessment. So click the continue. So the first task we can see here, we have here for 9 marks. So let's look at this one. So this task is about understanding and calculating the UK tax law principle relating to the VAT, registration and the deregistration and a special scheme. So let's have a look. They're saying, identify which one of the following statement is true about the HMRC. So whatever is HMRC relevant, which one is correct. So identify which one of the following statement about HMRC is correct. 1 marks question. HMRC is the relevant tax authority for VAT only. No, HMRC dealing with other matters as well. HMRC deals with your PAYE, corporation tax. There's a lot of matter HMRC authorized or the agent for the government, not only the VAT. So this is not the right one. HMRC is responsible for the VAT, for the payment of VAT to all registered business. It is not necessary HMRC is responsible for the VAT to make the payment for the non-registered business. VAT can be paid or can be recovered. So it's not HMRC only pay the VAT to the registered business. HMRC collect the VAT from the registered business. So it depends, you have to pay the VAT or you have to collect the VAT. So it doesn't look like this is the right one. HMRC used the VAT guidance and supplementary notice to show how they will interpret in the law. So this is the one we're going to look at more relevant. So HMRC used the guidance or guideline and supplementary notice to show how they will interpret the VAT law. All right, so HMRC regulate VAT outside of the UK. That's not true. HMRC is only regulate inside of the UK. The next one we have here, match the statement below with the correct type of supply. Okay, so let's have a look. So the first one is this supply are not chargeable to VAT. So remember, if it is not chargeable to VAT, we called it exempt supplies. So if it is not chargeable to VAT, we called it exempt supplies. Then these are taxable supply, but the amount of the VAT charge is nil. Now, if this is happened, we called it a zero-rated supply. Now, it is possible the product you sell, for example, the children clothing or children milk or the petrol. So this type of product you are selling is a zero-rated VAT. So you are charging to your customer zero-rated, but when you buy something, you pay the full amount of VAT. So you can claim all the VAT back from HMRC, but you don't have to pay any VAT because you never charge any VAT to your customer, because all the product you sell is zero rated. This supply include most taxable product and service. So this is a standard rated, I think, because if we have like include most taxable product and service, so standard rate is the 20%. VAT charge on this type of supply is greater than nil, but lower than the usual rate. So normally our standard rate is 20%. So if I charge less than 20%, but more than zero rated, that is more than nil, we called it reduced rated. That's the reduced rated. All right, the next one is says FC Footwear Limited started to trade on 1st January 2021, selling shoe for both adult and children. Adult shoe are classified as a standard rated, and the children shoe are classified as a zero rated. Then we have sell for the 6 month are shown below in the table. Now they're asking, identify the month and date that TC Footwear Limited will exceed the current VAT registration limit, that is 85,000. So when they are reaching 85,000 or crossing the 85,000, okay, we need to look at that. And also when completing the date, you must enter the year in full, example 2001, okay, that's not a problem. So we need to count when we reach 85,000. Remember that both the standard rated and the zero rated will be counted. Only the exempt sale, how much we sell for the exempt rated, we don't count that amount. But if it is zero rated, if it is reduced rated, if it is standard rated, all of the turnover or the sales we have to make it together to see it is more than 85,000 or not. That means for the January, you need to add these two. For the February, you need to add March, we need to add April, we need to add, and June, we need to add all. So let's have a look for the first one. So we have 14,200, 14,200 plus 8,300. So that is 22,500 we have for the month of January. Then we have again for the February, I can add 14,900 plus 8,500. So total, when I'm here, this is 45,900. So including this, then I have 14,500. So plus 14,500 plus 9,000. That gives me, when I'm here, this total 69,400. So 69. Oh, I'm here. So 69 is here. 400. And when I'm in April, so plus 14,500 plus 9,000. So let's try to do once again. I think I didn't add this one. So let's add all of this together until we come. So 14,200 plus 8,300 plus 14,900 plus 8,500, 45, then 13,100 plus 7,700. We have 66, then 14,500 plus 9,000. That gives me 90,200. So when we are here, it is 90,200. So if I added all of this thing together, so my threshold is 85,000. And for the month of April 2021, I reached to 90,200. So that means like I reached the threshold here. It is just a question, regardless, like when you reach the threshold, it could be like March or April. We just added. The main thing we have to remember here, we have to take both the standard and the zero rate. We have to take both. You have to be careful with that. So that means we reached the threshold on April. So you're going to say April. So I think we need to type the whole month. That is 2021. And can we take April? Yeah, 30th of April. At the end of the April. All right. The next one we have here, that is true and false question. Let's try that. Is identify whether the following statement are true or false. It says T Footwear Limited will exceed the VAT threshold using the future turnover method. Remember that we do not use the future turnover method or the future assessment method unless we are very much sure, 100% sure. That means within 30 days, I'm going to cross the threshold. Remember that we cannot guess, we cannot estimate for the next 12 months. We can only guess if I'm 100% sure within next 30 days, I'll cross or I'll reach the threshold 85,000. This is false. So Footwear Limited will exceed the VAT threshold using the future turnover method? No, because we already have the last 12-month data anyway, 6-month data anyway. So as soon as we reach the threshold, we have to register for the VAT. We really don't have to wait like for the whole year. TC Footwear Limited must notify HMRC within 30 days of passing the VAT registration threshold. This is true. So as soon as you reach the threshold, within 30 days, you have to tell HMRC, I reached the threshold, I want to register for the VAT, so you have to apply for the VAT number. The VAT registration for TC Footwear Limited will take effect from the date the VAT registration threshold was passed. No, that's not true. Remember that. If I reach on 30th of April, that means I have from that day, I have 30 days to tell the HMRC. That means I have the whole month of May. So within May, I have to tell the HMRC. And from 1st of June, my registration will be started. So if I reach the threshold on 30th of April, I have the whole month of May to tell the HMRC. And from 1st of June, I need to register for the VAT. So my registration will be started from 1st of June, not the day I reach the threshold, not 30th of April. All right, so any question from this one, from anyone? All right, very good. Let's move to the next one then. We click answer, so we move to the next one. The next one we have task 2. So the task 2 is say this task is about calculating and accounting for the VAT. This task contain A to D, so we have a 4-part here, A to D, so not a problem. So Tiffany is a trainee at S Accountant Limited, and she would like some help understanding about the VAT. Complete the following statement to assist Tiffany. 2 marks question. The goods and material brought by the business and expense incurred are called. Remember that if you buy something, it's always relevant to input tax. If you buy something, it is always relevant to input tax. If we sell something, it is always relevant to output tax. And input tax is a link with our box number 4, and output tax is a link with box number 1. VAT due on taxable supply is called output tax. So if I need to pay the VAT is output tax, VAT on sales. If I need to claim the VAT back from HMRC is input tax, VAT on purchase. All right, the next one is that Tiffany has asked you to show her how to calculate the VAT at the standard rate on net and gross amount, okay? Complete the following table to assist Tiffany. Round down your answer. So remember that if they ask you round down, do not round it up, always round it down. So if it is 25.566, so don't make it 567. You need to round it down. For invoice A, calculate the VAT using net value. For B, calculate the gross value. Okay, how much is the VAT? We already know that. So if there is a gross VAT, we need to divide by 6. If there is net VAT, we need to divide by we need to multiply by 20%. So for A, calculate the VAT using net value. So net we have 125. So I need to multiply by 20%. So 125.20 times 20%, not 25. And that gives me 25.04. 25.04, because 20% is the VAT. So 125 times 20%, that gives you 25.04. If I added 25.04, and that will be obviously the gross, but they made a mistake by intention to see if we can find it out, the VAT. The next one is says use the gross. For invoice B, calculate the VAT using the gross value. So we need to use this one. 227.88, we need to divide by 6. 227.88 divided by 6, and that will give us 37.98. So gross VAT divided by 6, net VAT times by 20%. The next one is to identify whether the following statement about the invoice are true or false. A simplified invoice is issued by the supplier who are not registered for the VAT. Remember, that is absolutely false. If you are not registered with the VAT, you cannot issue the VAT invoice. So you can only issue the VAT invoice if you are VAT registered business. If you are not VAT registered business, you cannot issue a VAT invoice. Invoice that are for exempt supply only are not VAT invoice. That's true. So if you are exempt, you cannot issue the VAT invoice. So invoice that are for exempt supply only are not VAT invoice. So normally on the VAT invoice is a written is a VAT invoice. So you have a different type of invoice. For example, if it is a pro forma invoice, it will be written pro forma invoice. If it is a VAT invoice, it will be written VAT invoice. Normally the VAT invoice we use to claim the VAT. All right, Tiffany is assisting with the VAT return for a client, Martin Shaw. She has asked for your help to identify the tax point. Now the tax point is a little bit complex. So tax point is all about when you're going to tell the HMRC about your sales or about your income or about your expense. For example, it is possible, let's say this is the month, year 2000 and let's say 11. So this is January and December, for example, is the whole year. Now it is possible I receive one order in quarter 1 and I raise the invoice in quarter 2 or dispatch the goods in quarter 3 and receive the payment from the customer quarter 4. So the customer make the order in quarter 1 and I send the goods quarter 2, I raise the invoice quarter 3 and customer paid me quarter 4. So in which quarter I should tell the HMRC about this transaction? So this one is called tax point rules. So tax point rules is the earliest of 3 events. Tax point rules is the earliest of 3 events. The first one is the basic tax point. The next one is the invoice raised. And the third one is payment received. Now, one condition you have to remember, if you remember on our tax point class, so we said, if the basic tax point become the tax point, that means basic tax point means like the service has been completed or the product has been dispatched. So if this has happened, we called it basic tax point. But always you have to remember, we need to ignore the order date. Order date is not comes under the basic tax point. So order date we have to be ignored. So after that, if the basic tax point become the tax point, then we need to look at one thing: is the invoice is raised within 14 days or not? If the invoice has been raised within 14 days, then we have to overwrite the basic tax point. So the invoice date will be my tax point date. So if you don't remember it, make sure you watch that video that we have for the basic tax point rules. So here we're going to look at 2 things. First, well, maybe we look for the deposit. So if there is a deposit and if there is a remaining balance, there will be 2 basic tax points, one for the deposit and next for the remaining balance. We'll look for the earliest event. So customer of Martin placed an order for 4th of May. Remember that order date, ignore. Don't have to worry about that, 4th of May. The customer paid a deposit 11th of May. That's the first one, 11th of May. That's my basic tax point. The goods were delivered. So that's the deposit, is a payment received, not basic tax point, payment received. The goods were delivered on 14th of May. That's the basic tax point. And issue the invoice 19th of May. So invoice raised. So between these 3, we have to look at which one is the earliest one. So 11th of May is the earliest one. Now, if this one become my tax point, because that's the earliest one, I don't have any problem. Only the problem is if the basic tax point become the tax point, then I have to look at the 14 days rules. Otherwise, no problem. So 11th of May, 14th of May, and 19th of May. Like within these 3, The 11th of May is the earliest one. Go for the 11th of May. So we'll say 11th of May is my tax point. Then the customer paid the balance on 31st of May. So this is the remaining balance. So this time we need to look at what will be the basic tax point for the remaining. So again, we need to look at few things. So we have a 31st of May and 19th of May is the invoice raised. And we have a basic tax point 14th of May. So now we need to look at, because this is gone now, our deposit. Now 14th of May, 19th of May, and 31st of May. Now we can see 14th of May is the earliest one. So this should be my tax point. But I have to stop, because if basic tax point becomes the tax point, I need to think, is the invoice is raised within 14 days or not? If the answer is yes, then I have to override it. So the basic tax point will not be the tax point. The invoice raised date will be my tax point. So from 14th of May to 19th of May, it is within 14 days. Answer is yes, it is within 14 days. Then I would say no, then basic tax point is not my tax point. Then invoice raised, this is my tax point. So I'll say 19th of May. Very careful with this one. Normally this question will be in the exam. So if you don't remember, make sure you see the recording for the tax point rules. All right, the next one we have task 3. Let's look at our question number 3. The question number 3 says, this task is about the recovery of the input VAT. This task contains the part A to D. Okay, complete the following statement. A business is a partially exempt if it makes the mixture of, so the partially exempt traders is the mixer when you have a taxable supplies and you have exempt supply both. So some product I sell is taxable and some product I sell, this is exempted. So when I sell both, we call it partially exempt traders. So it is a mixture of taxable supplies and the exempt supplies. The next one we have here, VAT registered business sell a van on which the input tax was blocked at the time of the purchase. Now the block input, obviously, like we need to look at the block input first before we can do. So I'll show you what is block input on the reference material. Block input is all about when you cannot claim the VAT for any reason. So for example, if we go to our book, so let me show you a little bit because you need to make sure you read that. So if you go to our reference material, okay. So on the reference material, you can see we have a block expense. Now you see on the block expense we have here, is for the cars. Input VAT can only be recovered on the car if it is wholly used for the business, not for the private. 50% of the input VAT can be recovered when car as a hire or lease. So if you hire the car or lease the car, then you can only claim 50% of that. VAT can be recovered on a commercial vehicle such as a van or lorry. So if we have a commercial vehicle, then we can recover the VAT. Asset with private use, the VAT recovery should be based only the proportion related to the business. So this is the block. Now, if you want to see what is the definition of the block accounting, we can quickly have a look at as well. So let's have a look. Should have the explanation. Okay, so I don't see it here. Should be somewhere in the book, the block expense. So for the time being, just remember that input VAT cannot be recovered on the block expense. So input VAT cannot be recovered on the block expense. If there is a block expense, input VAT cannot be recovered. All right, so maybe you need to look at in detail on the books for the chapter number, I think 2 or 3, chapter number 5 actually. So you can look at here, the block accounting. So I need to look where they explain all of this. All right, so we'll go back there and continue our question. All right, so here we understand if there is a block, well, we cannot claim the VAT, but for the van is a little bit different. We know that van, even is for the partial use, you can claim all the VAT. Now, normally what happened to the van, if we recover the VAT by thinking it is a commercial vehicle, then when we sell the van, we have to charge the output VAT. That means if I claim the input VAT, when I sell or dispose it, then I have to charge the output VAT as well. But if it is exempted, for example, when I buy it, I didn't claim the VAT, then when I sell it, I don't have to charge the VAT. Simple as this. So we have here is a VAT registered business sell a van on which the input tax was blocked at the time of purchase. So that means when I buy it, I didn't claim the VAT. That means when I sell it, I'm not going to charge the output tax. No output tax is charged. As this sale is exempt supply, this is true. So it's exempt. Because when I buy it, I didn't claim any VAT. So when I sell it, I'm not going to charge the VAT. No output tax is charged on the sale of vehicle. That's not true. So when you sell the vehicle, so if you have any other car, then you have to charge the output VAT. So it depends. If it is only blocked, then obviously it's a different thing. But it doesn't mean like all the vehicle, I'm not going to charge the output tax. But if it is for the private purpose, remember that if you buy a private car, you're not allowed to claim the VAT. And when you sell it, you don't have to charge the output VAT. But if it is a van and commercial vehicle, if it is not blocked then by purchase, then you can always charge the output VAT. The next one we have here, and that is M Limited is a VAT registered. It supply one product and recover input tax on business transaction. Every VAT period, Marby Limited receive a VAT refund from the HMRC. That means you never pay the VAT to HMRC. You always just claim the VAT from HMRC. So HMRC always pay you. So you got recover from the HMRC, but you never pay any VAT to HMRC. What is the reason? The reason is you are a zero rated seller. You have a zero rated for the VAT. So every time you sell to your customer, you charge zero rated. That means you never charge to your customer. But when you buy something from your supplier, they charge you 20% and you claim all the VAT back. So as you never charge to your customer, you don't have to pay any VAT. But of course, like you are claiming because you are paying to your supplier. So you are zero rated. All right. The next one we have here, for each of the three VAT registered business below, so we have a 3 registered business below, identify whether the following input tax can be recovered, is blocked or partially blocked. Calculate the amount of input tax which can be recovered for each transaction. A round down figure to the nearest penny if your answer is 0, okay? So the first one is a block input tax, then blocked input recover input tax, and the partially block input tax recover the amount. Okay, let's look at the first one. Is Ely is a sole trader who worked for a taxi driver. Remember that if you're a taxi driver or if you're a driving instructor or if you're a taxi business, you can claim all the VAT because your business depends on this car. So you can claim all the VAT. She has purchased a car for 30,000, including the VAT at standard rate. So 30,000 divided by 6. Simple as this. So you can recover all the VAT. So I'll say recover all the input VAT and 5,000, 30,000 divided by 6, 5,000. PY Limited lease a car for a sales director. The monthly leasing cost, including VAT standard rate 376.80. Remember that if it is a lease 50% VAT, you can claim. We check it on our reference material, 50%. So it's including VAT. So we need to find it out how much is the VAT. So we need to do 376.80 and divide by 6. It will tell me how much is the VAT. So 376.80 divided by 6. So total VAT is 62.80. And I can only claim half, so 50%. Times 50% of that. So divide by 2. I can only claim 31.4. So I can partially claim. So it's called partially blocked. Partially blocked, and I can claim only 31.40. The next one we have here, Dennis is a self-employed builder who used a commercial vehicle for business. So he used the commercial vehicle, he didn't buy it. Okay, so Dennis incurred 1,504.80, including VAT at the standard rate on repair to the vehicle which his wife paid for. He cannot claim. So if you do not take a lease, if you don't take a lease, it is blocked. So you're not taking a lease, so you cannot claim any VAT, so it will be 0. All right, the next one we have here, Alfie is a VAT registered sole trader. He used his car 75% for the business, okay. The car has a CO2 emission 148 gram. And the business has paid for the fuel skill charge 720, including the VAT, at the standard rate for the VAT quarter 31st of December 2021. Alfie claim all the input VAT on the fuel, account for the private fuel by using the appropriate fuel skill charge. Okay, so even though you're using for the business or private, doesn't matter. If you are paying the fuel skill charge, you can claim all the VAT back. Now, how much you can claim back is depends what type of car you have. So the car we have a carbon dioxide is 148 gram. So we need to look at what is the fuel skill charge for that. So the correct VAT fuel skill charge for the quarter, so the correct VAT on the fuel skill charge for the quarter ended 31st of December, how much it is. So we need to look at our reference material once again. So we need to look at that fuel skill charge. So if you look at here, our reference material, so the fuel skill charge is the box we have for all the fuel skill charge. So if you look at what type of car we have, so that was 148 gram. So 148 quarter, so we need to look at it is quarter for the quarterly. So we have 100 and more than 145, so 640, 50, so 292. And if we divide by 6, so if we take 277, so we'll take 277 because it's like more than 145. Remember that for the VAT, we have to always round it down. So we need to always round it down. So that means every 5. So you can see 125, then 130, 130 to 135. So that means the question said 148 gram CO2. That means I will not take 150. I'll take 145. Remember that. I'll always round it down. So I don't take like, okay, 148 close to 150. No. Even if it is 149, you take still 145. So I'm looking at the quarterly VAT. So 227. So 277 actually. So divide by 6. And that will give me 277 divided by 6. And that gave me 46.17. So we'll take that. This table is given. Yes, Naira, it will be given in the exam. So it will be given on your reference material. That's correct. So we'll take 46.17. All right, let's move to the next one. Tax 4, we have here for 8 marks question. Let's read this one. So we have here, this task is about preparing, calculating, and adjusting information for the VAT return. This task contains A to C. Okay, delimiter prepare VAT return for the quarter ending 31st of March, June, September, December all the 4 quarters, does not use a special scheme. Okay, so there is no cash accounting scheme, there is no annual accounting scheme. That means a standard rate. The standard scheme is 3 months, is a quarterly one. D, assessing with the preparation of the VAT return for the quarter ended 31st December 2021. Okay, so identify which of the following record are not relevant for the VAT return. Now remember that we need to remember VAT return is all about relevant to our sales, our purchase, and also if there is any bad debts, if there is a bank record, so we need to see how much money received, how much we paid. But if there is inventory, it is not relevant to our VAT return. Remember that inventory have no connection with the VAT return. So how much stock you have doesn't matter, your VAT will be increase or decrease. So the bank record, yes, it is relevant, of course. Sales invoice, yes. Bad debt relief, of course. But only this one, inventory records, it is not relevant with the VAT. So because of the inventory value, I have no impact on the VAT return. The next one we have here is that D has identified that some error were made in the previous VAT return for the quarter ended 30 September 2021. For each error, calculate the adjustment, round down your answer to the nearest penny, identify the impact. Okay, let's have a look. The first one is a sales invoice to a customer for 3120, including VAT at a standard rate, was not posted in the accounting software. So let's have a look how much it is. So we can do that. So 3120, so 3120, including VAT means divide by 6. So 3120 divided by 6, and that gives me 520. So this 520 will increase the output tax, 520, because I did not post it. I forget to enter one invoice. So that means I didn't pay the right amount of VAT, so I need to pay. So increase the output tax. The next one is a credit note from a supplier. So this time is a return. Credit note from supplier means I return something to my supplier and he gave me the credit note. Plus VAT, a standard rate, was recorded twice in the accounting software. That means I claim the VAT, input VAT twice. So what will happen now? So we need to find 528 times 20%. It's a plus VAT. Plus VAT means VAT is not inside, is a net figure. So 528 times 20%, that gives me 105.6. So this will be on the amount adjustment 105.60, and that will increase my input tax. Remember that if there is a credit note, it's always linked with the input tax. Credit note represent I claim less VAT. Why? Because credit note means a return. So I return something and customer give me the credit note. And credit note, obviously, I record on the credit side. Why? Because when I buy something, I claim the VAT as input VAT. And later on, if I don't keep the item, if I return, so I cannot claim the VAT, I have to pay the VAT back. So I enter the credit note. That means I'm reducing the input VAT. So here I did it twice. Now I have to increase it because I did twice. All right, the next one says D Limited trades internationally, and D has asked you to help him understand the postponed VAT. Now, the postponed VAT is introduced in January 2021 after the Brexit. Here, the government said like, okay, let me tell you how does it work. So normally, this is relevant to the import. When you buy something from outside of the country, what happened? HMRC hold the goods in the airport, in the customs, and you have to pay the VAT to release your product when you buy something from outside of the UK. So they hold the product in the customs. You have to pay the VAT to release the product. And once you have the product, once you pay the VAT, you release the product. And on the VAT return, you can actually claim the VAT back. So ultimately, there is no impact for that. So you pay the VAT to take out your goods. And later on, you claim this VAT on the box number 4 so that it's become neutral. There is no impact. But this postponed VAT, HMRC said now it is possible the person is buying the goods. Maybe he don't have any money to pay the VAT right now. For that reason, he can get the postponed VAT, so he don't have to pay the VAT to release the goods. He can actually take the goods without paying the VAT. And later on, he can show this one on the VAT return, so it's gonna be neutral. So HMRC is thinking it make no sense like I'm holding the goods and the person pay the money from his pocket to release it, and after that he claim it back. So maybe it will have impact on the cash flow. So maybe that person don't have money to release the goods. So that's why we can release the good without paying the VAT. It's called postponed VAT. So it's relevant to the import. It's only when you buy some goods from outside of the country. So postponed VAT relevant to the import. The date postponed accounting is effective from 1st of January 2021. It started after the Brexit. The postponing accounting delay the VAT payment. So you don't have to pay the VAT immediately when you release the goods, so you can pay VAT later on. So you can delay the payment of the VAT. All right, the next one we have here, number 5. So number 5 we have for 12 marks. Let's have a look what we have here. So here we have, this task is about verifying the VAT return, okay? This task contained part A to B, okay? Identify whether the following statement about the transaction outside the UK are true or false. Outside the UK is export, so you know that, and export is always zero rated. Box 1 of the VAT return does not include the export as they're zero rated. Absolutely true. No point of including the zero rated. Box 6 of the VAT return does not include the export as a zero rated. That's false. Box 6 only tell how much sales I make, regardless in the UK, outside of UK. So total VAT, how much I sell, total, including UK or outside of UK, I have to say. For example, if the total sales is 10,000, 5,000 maybe in the UK, 5,000 outside of UK, not a problem. We have to say everything, how much we make a sales during this period. So it's not about the VAT, the net sales, not the VAT, net sales, box number 6. Box number 4, the VAT return include VAT reclaim on import which have been accounted for using the postponed accounting. Absolutely true. So if you release the product without paying the VAT, you have to record it on our box number 4 to say like, I didn't pay the VAT, but I'm claiming back, so it's going to be neutral. All right, the next one we have here, T-Limited has recently changed accounting software to calculate the VAT due to HMRC. No specialized scheme is used. Okay, so no specialized accounting scheme is used means they are using the standard scheme. Okay, fair enough. The draft VAT return contains the figures. So we have a box 1, 2, 3, 4, 5, 6, 7. So we have 1, we don't have 2, and 3 we have 4. So 2 is basically the Northern Ireland thing, so it's not very common in the exam. Box number 3 is the total of box 1 and 2, so it's make no difference. 4 is the input VAT, and box 1 is the output VAT. Box 5 and 6, box 5 it says how much I'm going to claim or I'm going to pay to HMRC. So difference between the box 3 and 4 is box number 5. And box number 6 is the total sales, and box number 7 is the total purchase net. The VAT liability in the trial balance at 30 June 2021 has a balance of 23,560, and the following figure has been extracted from the nominal. Okay, so we have the opening balance, paid, output, input, and carried forward. All right. The trial balance include closing trade receivables totaling 62,400, including the VAT standard rate, and a closing trade payable 51,000 on all including VAT standard. All right. So what is the requirement here? Identify the reason for the difference between the VAT due in the draft VAT return and the figure shown in the trial balance. So on the trial balance, it says VAT return says we need to pay 14,020, and the trial balance says 23,560. Okay, that's the difference. All right. So what is the reason? Identify the reason for the difference between the VAT return and the figure in the trial balance. So the software has been incorrectly set up for the cash accounting. So what is the difference between this? And the software has been incorrectly set up for the annual accounting. Now, remember that annual accounting means we just submit VAT once in a year. So it's not relevant here because the question said that they don't use any special accounting scheme very clearly. So that means it's relevant with the cash accounting. Now, what is cash accounting? Cash accounting is all about we only consider the VAT for the amount that customer is already paid. So if there is any invoice outstanding, that means customer did not pay to us, we did not consider the invoice. Same wise or likewise, if we have a purchase from the supplier, and if we did not make the payment yet, we do not consider that. So cash accounting scheme or the cash accounting is all about on the received basis. So if I receive the money, I only recorded that time. If I paid the money, I only recorded that time. So you don't follow the accrual concept. So if the invoice is outstanding, if the supplier bill is outstanding, we do not consider that. So this is the reason there is not matching, because you can have a look here. So we have a trade receivables, so 62,400. If you divide by 6, how much is VAT inside? And 51,060 divided by 6, how much VAT outside? If you find the difference, it will be exactly the difference is showing here. So annual accounting scheme is not, so that would be the right one. All right, then say complete the table below to reconcile the figures. So we can and use the minus sign where appropriate. Okay, amount due on the VAT return. So amount as per VAT return. So VAT return said we need to pay £14,020 on the box number 5. So we need to write here £14,020. According to the VAT return, we need to pay HMRC this amount. But now we need to make the adjustment because the trial balance say we need to pay 23,560. So we need to do the adjustment, two adjustment, one for the trade receivables, one for the trade payable. So let's have a look how much is the trade receivables. So let's do that. So we said output VAT on age receivables. So we have 62,400 and divide by 6. That gives me 10,400. 10,400. That's for the output. So I should add it. And for the input on the age payable. So input VAT on the age payable. And that is 5160 divided by 6. This is 860 and it's minus. And you can see exactly it will be balanced. So I did not consider this to invoice, like for the receivables and the payables. That's why my VAT return shows I need to only pay 14,000. But when you look at the VAT return, it shows like 23 because we consider the accrual concept on the VAT return. All right, the next one we have identified the correct action that F Limited should take. So what should they take? Correct the VAT return next quarter, submit the draft date, carry on the correction by making the changes accounting software, submit the return, carry out the correction by making the changes to the accounting software, and ask accountant to review. That's the one. So all you need to do, if you use QuickBook or Xero, any accounting software for the VAT, all you need to do, you need to change from the cash accounting scheme to the accrual scheme. So if you move to the accrual scheme, absolutely fine. It will be adjusted automatically. You don't have to do anything. All right, but you can ask your accountant to check it. So for the double check. And the next one we have question number 6. So let's have a look what we have on the 6. For 11 marks, it says this task is about VAT rules on accounting, on record keeping, filing, and the payment and repayment, including the non-compliance of implication. This task contains A to C. Identify whether the following statement about the VAT legal requirement are true or false. Let's quickly do it. HMRC only consider that VAT return is late if HMRC receive more than 3 weeks days after the due date. That's not true. So false. So HMRC only consider that a VAT return is late if it is received by HMRC more than 3 weeks after the due date. That's not true. Even if it's 1 day, they can consider it late. HMRC has the power to issue estimated assessment. Definitely, if you don't submit the VAT return or fail to submit the VAT return, HMRC can send you the estimated bill, like based on the estimation, we think your VAT liability will be this. Can you pay this amount? This is absolutely true. Penalty will never be payable as a result of compliant check from the HMRC. That's false. As long as HMRC come for the investigation, if they found something wrong, they'll give you the penalty. So it's not true. The next one is the owner of a GB building service is aware that business reached the VAT threshold 6 months ago, 31st of March 2021, and failed to register. If you forget to register and if you say like, oh, I supposed to register 6 months before, so HMRC will consider your sales from 6 months before, how much sales you make, HMRC will consider the VAT from there. So they take the VAT from there. Now, if you say like, oh, I never take the VAT from my customer, how I'm going to pay the VAT? HMRC will say, it's not my problem because you forget to register. So I will think like you're supposed to register from 6 months before. I'll see from last 6 months till now, how much sales you make, you need to pay the VAT. So I'll calculate is it like including VAT. So I'll divide by 6, how much VAT you have to pay it now. So either you can contact your customer, like tell them like, I forget to charge you the VAT. Can you pay the VAT now? It is unlikely they will pay you, but we have to take the money from you because you forget to register. Complete the following statement about the GV building service. GV building service will face a penalty from HMRC of a maximum of how much penalty you need to pay. It's a maximum of 70% of the potential loss of the revenue. Remember that, not the profit, revenue. Now, how much is the penalty? You can look at the table that I showed you earlier. So it is very much clear. If you're late for 6 months, for 3 months, how much penalty it is. So for this scenario, for the 6 month, the maximum penalty will be 70% of the potential loss of the revenue. Identify the date from which HMRC will treat GV building service as being registered. So 6 months before the day they reach the threshold, from that day, HMRC will believe you should register from that time. You have to pay the VAT from that time. You didn't do it, so that means you have to still pay the VAT from that day. So if we 31st of March, so 31st of March, they will consider you should receive, you should register when we are now. The vacation thing goes on 31st of March 2021. So identify which date the building. Okay, there should be 6 months before the day. So if we look at like the day, so it will be 6 months before. So March, then April and May. So it will be 1st of May started. So it's identify the date from which HMRC will treat GV building service as being registered. Now, of course, if it is 31st of March, then 31st of March, they will think even though you did not register. So 31st of March, they will feel you reached the threshold. So from 31st of March, you have 30 days. So that means you have April. So within April, this 30 days grace period HMRC gives to tell HMRC. And from 1st of May, it will be started. So the day I reach the threshold, from that day, I have 30 days. And the first day of the following month, the registration of the VAT will be started, the 1st of May. All right, the next one is from the date registration should be taken place, GV building service can what? Can attempt to recover the output tax due from the customer. So the company can try to get the VAT from the customer. Company can tell the customer that like we're supposed to register on 31st of March 2021 and we forget to do that. So can we have the VAT now? So very unlikely they will give it to you. But when you read the question, you have to be very careful. They said 6 months ago on 31st of March 2021. So on 31st of March 21, that means on that day I should register. Not like from that day, don't go back 6 months. Don't do it. So read the question carefully. 6 months ago on 31st of March. So that means I should register that day. So from that day, I will have 30 days to tell the HMRC. And the following day of the first day of the following month, that is 1st of May, I need to register. All right, the next one we have M Limited operates the annual accounting scheme, okay, yearly. So it says The VAT due for the year ended September 2020 was 39,690. That's the last year VAT. The VAT due for the year ended 30 September 21 for this year is 40,000. Identify the due date and payment for MPLC for the year ended 30 September 2021 by completing the following statement. All right. So the first thing we need to know, how much is the VAT? So VAT was 39,690. That's for the last year. And we know like how we calculate the annual accounting scheme. So we take 90% of the last year liability, divide by 9 equal installment, and we pay from the month number 4 to month number 12. So we say M Limited MPLC will make a payment of how much for the month commencing. So let's have a look. Let's see how much it is. So we have 39,690. We'll take 90% of that. So let's have a look how much it is. 39,690 times 90%. 35,721 divided by 9. We need to make 9 equal installment. So every installment we have to pay 3,969. Need to pay it for 9 installment. And starting from month number 4, at the end of the month number 4, remember that. So we need to find the amount. This is 3,969, and start from month number 4. So what is the month number 4? So our year is ended on September. That means October, November, December, January. So 31st of January at the end of the month number 4. And the final payment will be on the month number 14. Remember that. So that means we have a September, October, and November. So the final payment will be 30th of November at the end of month number 14. Very careful with this date and the amount. And the final payment will be how much? So we already paid 90%. That is 35,721. And this year liability is 40,770. So 40,770 minus 35,721. So the remaining balance we need to pay this year on month number 14. So 40,770 minus 35,721. And that gives me 5049. 5049. You have to pay the balancing amount when month number 14. All right, that's it. So let's move to the next one. The next one we have. So we have 2 more questions. Let's have a look. This one is, so this task is about the principle of the payroll. Okay. So identify whether an employer must report the following information on a full payment submission, FPS or EPS, employer payment summary. We discussed a little bit this one, but you need to make sure you read the whole page for the EPS and FPS. In the exam, there will be definitely one question from the PAYE or from the payroll. Make sure you understand it, you remember it, you have a 12 marks, so very important. A claim for the employment allowance. Remember that employment allowance always has to be claimed by the EPS. And the software will do automatically for you. You just need to like submit it to HMRC. It's not like you have to do a lot of jobs. Software already say like your EPS due, your FPS due, and you just need to click, submit to HMRC, and it will tell you it's submitted successfully. That will give you a submission reference number, and it will be saved on your payroll software. It's not a difficult thing. Employer national insurance contribution. This is go with the RTI, so FPS. To inform HMRC that no employee have been paid EPS. So EPS is only used for the claiming something that employer want to tell the HMRC. For example, apprentice levy, or claiming the maternity, or claiming the employment allowance, or tell the HMRC no employee get paid. So all these things, if you want to tell HMRC separately, that has to be done through the EPS. FPS is all about how much you're deducting, the PAYE, how much the employee getting salary, this and that. Identify whether the following statement about payroll deduction is a true or false. Say student loan repayment are deducted once an employee income exceeds a predetermined threshold. That's true. So it's not like if you only earn £15,000 a year, and you have to pay the student loan deduction to HMRC. No, there is a limit. For example, normally if you earn £22,500 or £22,000 every year, the threshold is keep changing. So if you earn minimum £22,000, then they will charge you 2%, or after the threshold, then like difference. For example, if you earn £25,000 and the threshold is 22, so 25 minus 22, on the difference you have to pay only the student loan. So student loan have a two plan, plan 1 and plan 2. So if for one for the undergraduate student, plan 1, and plan 2 for the postgraduate student. When you will be working in the payroll in future, so you'll learn this thing. For your exam, you really don't have to know all of this detail. If you know like there's a threshold, that's absolutely fine. All right, it's a KB Limited employ several number of staff. The finance manager has reviewed the P60 for the year ended 21-22, and they were distributed to staff on 20th of May. P60 have been distributed to staff. Okay, when? On time. Remember that. I think the P60 has to be given by if you have on is generated on 5th of April. I think like by 30th of May, the deadline, the maximum, you can take 30th of May to give the P60. So P60 is basically 6th April to 5th April. It's a year-ending summary. It shows how much is the income, how much tax, everything, the total summary for your whole year. Now, after the April, normally you have to give immediately, but maximum by 30th of May on the following year. So if it is 2021 and 22 tax year, so the P60 will be generated on 5th of April 2022. So from that day, you have a time till 30th of May, and by this time, you have to definitely give this P60 to your employees by the printed, by email, the way it is suitable. No restriction for that. All right, it says Sarah is employee of K Limited. That's our P60. And the total gross earning 18,828.04 from the AB Limited. Okay. So what's happening here? An extract from the RP60 shown below. Okay, so in the previous employment, we have 1571 and total tax 189. This employment 22,757, tax 2174, total income for the year, this total tax for this. Now remember, if you leave a job middle of the year, and if you join in a new job, and if you go with the P45, so for your new job, if you give them the P45, they will enter the P45 information when they enroll you on the payroll. Now, on the P45, they already can see how much you earn from the last employment, how much tax you paid, and everything they will enter. If they only enter this information, you're going to see on the P60. But if you join to the new job, and if you said like, I don't have the P45, in this case, what will happen? They will not enter the P45 information. So the P60 will generate only for the income for this employment, not for the last employment. So in this case, you might have a discrepancy. You might think like, oh, for this year from the two job I earned 20,000, but how come I only see 15? Because the last job you didn't give the P45 to the new employer, so he didn't put it, so you don't have this income on the P60. All right, so it says the amount showing on the P60, it does not agree with the amount she received on 2021, which is 18,000 from the K Limited. Okay, let's have a look. So it says the following additional details are available. Sarah worked for K Limited for less than 10 months, 21-22, received annual salary 28,000, which was paid equal monthly installment. Sarah was member of the company pension scheme. Employee pension contribution was 124 per month, and employer contribution 75. Okay, complete the table to reconcile the amount Sarah received on her gross pay from the K Limited and the amount on the P60. Enter all the amount to decimal and the minus if necessary. Okay, so let's have a look. The gross pay is how much she's receiving. So let's have a look. So the gross pay, and we have then we have to adjust the pension contribution. So it's an employee pension contribution. Then we need to adjust the income tax, and that should adjust with the net pay. Okay, now the net pay she is receiving says how much? 18,828.04. So this one we have here on the box. So this is our net pay. We need to find what is the gross pay. Okay, first we start with the employee national insurance contribution and how much it is. So it says 1754. We can see it here, 1754.76. So we said, and this is a deduction because if you work for a company, you have to pay the national insurance. So it is a deduction for you. So it's a minus 1754.76. Income tax also deduction, because when you work for a company, you have to pay the income tax. And the income tax we have here, that is 2174.20. It's also minus from this employment, you are paying the income tax, 2174.20. So now we can see here how much will be the taxable pay per P60. So we need to, it's a minus, we need to make an add. So we do 18,828.04 plus 1754.76 plus 2174.20, and that gives me 22,757. 22,757. So you understand taxable pay per P60 was this 22,757, because after the income tax and the national insurance, she received 18,828. So this is according to the P60. Now, if you look at the employee pension contribution, so how much it is? The question said it is 124.30 per month. So 124.30, and it says she worked for 10 months. So she worked for 10 months. So 124.30 times 10, that gives me 1,243. This is the money goes to the pension. So 1,243. So if I added this to now, 22,757 plus 1,243, and that gives me 24,000. So basically, our gross pay was 24,000 pounds. From the gross pay, what happened? She paid for the pension, so we need to put it minus. So this one's supposed to minus pension she need to pay. So her gross pay was 24,000. From the gross pay, she paid the pension that is normally not shown on the P60. The P60 is mainly shows, if you think, you can see here the pay and the tax deducted, also the national insurance. So we don't see here any pension contribution. So for that reason, you might be confused, like, oh, I earn more, why my net pay is this? So here, the gross pay is 24,000, the employee pension contribution 1,243. So taxable pay basically 22,757. From here, she paid the income tax and the national insurance. So that's why the net pay is showing 18,828. And that's the one we can see. It shows on the here. And that's why I say total amount on the P60, as it does not agree with the amount she received during the year, which is this amount, 18,000. So P60 is saying you are earning this amount, but actually you receive 18,000. This is the explanation for that. So if you are confused, like why my P60 said my income is 22,757, and on the bank I receive only 18,000. Why? Because from the 22,757, you need to minus your income tax and the national insurance, and that will tell you how much actually you receive on your bank. And from the gross pay, we minus the pension to find out how much the taxable pay. All right, so let's have a look on next one. This is the last question we have. Let's quickly do that. So it says, this task is about reporting on the payroll, okay, VAT and the payroll both. This task contains A to B. You are an accounting assistant for ABC. You're responsible for the preparation of payroll, okay. The supervisor of the care staff approved the hour by the care staff, all payment prepared by the business owner who is responsible for the day-to-day. Year-end financial statement prepared by your manager. You have prepared the wages report for the quarter to March. Okay, so January, February, March as follow: gross pay, income tax, employee national, employer's national insurance, and employment allowance, all of this thing. The report has been approved by the manager. Payment to HMRC are made quarterly. Normally, you can pay the POI quarterly if the POI liability is less than £1,500 a month. So if your POI liability less than £1,500 a month, then you can pay the POI quarterly rather than monthly, like 22nd. All right, so complete the email. So let's do that. So let's complete the email. So you're going to email to the business owner. So to the business owner of Pedal Cat. So I'm writing the email to the business owner from the accountant. Okay, it says, please find the attached payroll. This is this for the quarter ended. You have previously approved monthly salary, which paid quarterly. Okay, on 25th of each month. All full payment submission, FPS, are submitted to HMRC on time by which date? Now remember that if you make the payment on your employee, on the day you make the payment, normally you have to submit the HMRC on that time. So we need to know when you make the payment to HMRC, to the employee, if we have any information, and how we pay. So let's have a look. So payment to HMRC made electronically, that's fine. So okay, it said like we pay our employee on 25th of each month. Okay, if we make our employee 25th of each month, on that day we have to submit the RTI. That means with that day we have to tell the HMRC how much you are paying. So for example, if you receive your salary 1st of April, we need to tell the HMRC by 1st of April, like we paid this amount. So you cannot delay. So need to see the payment date, and on the payment do we have to tell the HMRC as well. So if we pay 25th of each month, we have to tell the HMRC on 25th. So our FPS or RTI has to be submitted on 25th. The day I make the payment, I can submit early 1 or 2 days, but I cannot be late. All right, that's number one. The amount due to HMRC for the quarter is how much? So we need to look at how much you need to pay to HMRC. So we need to see how much is the income tax. So income tax, we have 1,296.80. Then we have a employee NI 925.48. Then we have a employer's NI, that is 1163.86. And we have a employment allowance. Employment allowance, like the amount you deduct from the POI, it's like a benefit for the company. So they don't pay up to this amount to HMRC. So for the whole year, last year it was 4,000. This year I think it's 5,000. So a company gets some advantage. So up to this amount, they don't have to pay the NI to the HMRC. So they get some allowance. So if we minus the 561.72, and that gives me 28.24. 28.24.42. This is the amount we need to pay to HMRC. How we get this one? We add the income tax and the employee national insurance and the employer national insurance, and we minus the employment allowance. The amount must be paid by HMRC 22nd. Always remember 22nd. We pay by electronically, so that means 22nd of April. 22nd, because the question said we paid electronically. All right, so by 2022, all right, this is the quarter ended 2022. As the average monthly PAYE payment is less than 1,500. If the average PAYE monthly, because for the quarter is 2,800, if we divide by 3, so for the month it is less than 1,500. If it is less than 1,500, I can pay quarterly. I don't have to pay each month. So the amount due to HMRC can be paid quarterly. Okay, P60 for the 21 and 22 must be paid to all employee by when? 31st of May. So my P60 will be generated on 5th of April. From 5th of April, I have a following month. So whole following month, 31st of May is the deadline, 2022. By this time, I have to give all my employees the P60. All right, the next one we have here, the national living wages and the national minimum wages increase in April. Every year, normally it is increased in April. The business owner of PCAT Care asks you to increase the pay rate at PCAT Care in the line with the new rate. So for this one, you really don't have to ask your director. If the government change any rate, we have to change the rate on the payroll anyway. So identify which two of the source information you can use to find it out to correct the national minimum wages. So the first thing, we can check the government website. So Gov website always publish that. So otherwise, we can ask to our manager. So it's an email from your manager. Yes, I can ask my manager what is the new rate for the employee. So he can give it to me and I can change the rate. Social media, no, we don't believe on social media. Conversation with the supervisor, no, we don't have a conversation. We need a written confirmation. So if someone asks me like, so you have a coffee with your manager and manager said, change the rate to this amount, don't do it, need a written confirmation. Update from the government website, yes, we need to look at the government website, how much they are saying. All right, I think this is the end of our question. So all of this thing we need to do. Once we are done, we need to click answer, so the exam will be finished. And this is the way in the final exam you get the warning, you want to submit, you said yes, and then it will be submitted your exam. So you can see here, this is completed. So you have all exceeded. So we have get like the full score here for every single question we have done. So that's how you can do the practice on your from the AIT website. You can log into your MyAIT account. You can click the paper you like to practice, click the practice assessment, and you can start practicing on your computer. And there's 2 questions, the one you practiced today. There's another one, assessment 2, you can practice yourself. And more you practice, of course, you will be more confident in the exam. Remember that the only way you can be ready for the exam, you need to read the whole book. Every single page you have is all of information. You need to read that, number 1. Number 2 is like, look at the reference material, back of the book. Make sure you read the reference material. And number 3 is practice the question bank from all the past question you practice from there, the previous questions. And also like 2 questions from the AIT website, at least practice few times. And once you feel comfortable, then go for the exam. So if you practice that way, absolutely you will get very good score. In this exam, it is possible you can score 100 out of 100. Hopefully this video will be very helpful for your practice. Practice as much as you can. And if you have any question, feel free to email me. I'll definitely get back to you.